Have our experts here again this morning, and we'll ask some real hard questions and get you some help as well. You can send us your questions right now on our Fox 26 fan homepage. Right. And with the looming August 2nd deadline creeping up on us, according to with Fidelity Investments, there are three key issues. And as former Judge Robert Eccles just reminded us, it's the debt and spending causing the trouble. According to Fidelity experts, the issues are how much to raise the debt limit, how much to cut spending, and whether to raise taxes. The Treasury Department has said it will reach the limit of borrowing capacity, but how is this affecting you and your family, besides making you really nervous? Yeah. Fox's Mike Iskowitz is talking to some local and legal financial experts in our newsroom. He's ready to get some answers to some really tough questions. Mike?
Yes, sir. We're joined this morning again by financial gurus John Bott and Lance Roberts, and also by employment lawyer Barbara Gardner. And I want to start with you, Barbara, because you were telling me you handle a lot of cases from terminated employees. You said they range from janitors to CEOs. You're seeing this more and more. So many people are being downsized and laid off, and we already know the unemployment rate is sky high.
Yes, Mike, we handle all kinds of employment cases, and over the 30 years I've seen a trend. Back in the 80s here in Houston, of course, we did have the heavy recession because we're so energy related, and downsizing then might have been legitimate, but I think corporations found out that 4 people could do the work of 5, 3, 2, and the oil companies, for example, are flush with cash, but yet they're still laying off people. We call it reduction in force cases, RIFs. People want to work, and those people, the regular people from the middle class and all through society, they can't go to the malls and spend money.
Sure.
So that affects our economy.
Lance, or John,
you know, the manufacturing jobs went up by 15,000 last month. It was government jobs that caused the jobless claims to rise last month.
Okay, and a lot of the job growth had been coming from government too recently, hadn't it? I mean,
up until the last couple of years, but the point is the government's the one that's doing the firing now, not the corporations.
So the bottom line for the folks is, if you have high unemployment, like you said, there's nobody out there to buy stuff that drives our economy, and so unless we can get those people employed, it's going to be hard to crawl our way out of this.
Absolutely. Look, this is basic economics, and the problem is that people have to work, they have to produce in order to get a paycheck. They in turn then go spend that money, and when they spend money, it creates final demand for businesses, so that they will, in terms of, they say, wow, I've got a lot of customers, I need to have more inventory, I need to hire some more people to work. But that final demand isn't coming. And the reason that final demand is not coming is because people are worried about, if they have a job, they're worried about keeping it. If they don't have a job, they can't find one. Yeah. And in regards to what Barbara was just saying a second ago, if you look at productivity, everybody talks about the greatness of productivity. Productivity has a really dark side to it. And that is simply the fact that you can get more work out of one individual.
Because of technology.
And what you're seeing today is that instead of hiring 2 people, I can hire a computer that can answer my phones and route my calls through my company. I mean, how many companies do you call today and you immediately get greeted by a computer rather than a live person at the front desk?
So John and Barbara, unless the government passes some kind of regulation that says no more ATM machines are allowed and no more computerized voice answering systems are allowed, how can you transition from a technology-driven workforce where you need fewer people to kind of what we had, back in the 1950s, where we had manufacturing and it was easier to find a job?
Well, I think there's a good answer to that, because you look at our society, we have changed the type of product, but we are specialists now, we are smart, we are probably the most intelligent in all of these areas in the world. But one of the things that's happening, the Congress, I believe, and the polls show, are not listening to the people. We're not pulling together. 58% by the NBC and Wall Street Journal poll said that they support President Obama's long-term 10-year balanced approach,
which
is some federal cuts, but raise taxes on corporations and wealthy. Because this is a good quote from Warren Buffett that I found. He said recently, we, the wealthy, have never had it so good. He said, our tax rates have never been lower than this.
I wish I knew what he meant.
He said, it's shown in the great disparity between the wealth in the last several years.
Which does seem to be getting bigger.
What I'm seeing, though, is the middle class and the lower class and the wealthy have created, and now there's becoming a great chasm.
I think that's what a lot of people think, yeah.
That's what a lot of people think, but it's grossly mistaken. If you look at how people pay taxes, the top 20% of the population, in terms of wage earners, they pay almost 90% of all the taxes. You have 48% of the population that pays no taxes at all. The problem is not taxes. We do not have a revenue problem in terms of the government. What we have is a spending problem. And history clearly shows that if you raise taxes, you immediately put people out of work. Why is that? Because those people that are paying the 80% of the taxes or 90% of the taxes, those are your small businesses that create 70% of all your jobs. So immediately when you start raising their taxes or their outflows from their companies, they immediately go into a defensive posture, which is to start laying off people, cutting costs. And that's why you're not seeing businesses create jobs today. They've got temporary tax cuts. See, temporary tax cuts don't work because you can't plan.
They want the certainty to know what's going on in the future.
Healthcare, all these other issues are all sitting out there. We don't even know what the resolutions to these things are.
Yeah. Hey, John, I'm going to throw you a curveball here. Our anchor, Melissa Wilson, has 2 little boys, and one of her little boys, her youngest, asked a question. He said, Mommy, why can't we just put dollars in the copy machine and just print copies of them and pay everybody with that? And I know it sounds like, you know, from the mouth of babes, but in reality, the Federal Reserve has a printing press, right? And is that an actual solution? I mean, can we just print money and just pay our debts with that?
Well, from the deficit standpoint, what you're looking at August 2nd deadline, but you know, they had increased revenues in May of $15 billion, and they had a decline of $1 billion in spending. So you've got $16 billion extra dollars that they didn't plan on. Plus, you seem to have a decent economy going forward. Now, the government basically doesn't have their big interest payment until August 15th. August 15th, they got a $65 billion principal and interest payment, and that's what everybody's worried about. So the soft deadline of August 2nd is really a soft deadline. Now, to get the answer to your question,
quickly, because we're running out of time.
Okay, the Federal Reserve does have the ability to create money. They fed the Treasury Department already somewhere around $145 billion over the last 2 years. So they actually could keep this economy going for 2 or 3 more months before we had to dig into it. But there's other solutions too.
All right, maybe coming up in the 9 o'clock hour, I want to pick your brain about Representative Ron Paul's solution, because he recently said, let's go ahead and default because it's basically inevitable anyway, so let's just take the Band-Aid right off. So I want to ask you your opinion on that, because I like Ron Paul.
Look,
so
they won't even let Greece default. I doubt they're going to let us default.
Probably not. Okay, let's send it back over to Jose in the studio, and of course we'll have more coming up at 9 a.m. You could also send in your questions to our Facebook page. Just search Fox 26.
Very interesting discussion. A vote expected to take place just days before the actual deadline. Taxpayers are getting pretty nervous, understandably. So what happens now that lawmakers are going back to square one, and how could this crisis affect your financial future? We brought in some economic experts to help answer some of those questions. So right now, let's head over to Mike Iskovitz, my colleague in the newsroom. Mike.
Yes, sir. Well, we want to give you some good takeaways that you can learn something from here to help protect your money and your life. We're joined by financial experts Lance Roberts and John Bott, and also I knew I was going to say entertainment.
I can entertain.
Employment lawyer Barbara Gardner. I was just presenting to you guys the recent poll results from Rasmussen Reports, and I don't want to get too deep into it because there's a lot of numbers, but here's some of the highlights. 46% of people polled recently think that most people in Congress are corrupt, and only 6% of those polled think that Congress is doing an excellent job. So how can we count on these people to dig us out of this this ditch that we're in if they're all a bunch of untrustworthy people? Anybody have a comment?
That is a problem. I think that there's something to that, because there are a lot of other polls that say the majority, 65% yesterday from the Pew Research Center poll, said they want the representatives in Washington, D.C. to come together and compromise, even if it's the deal they don't agree with. And the congressmen are not listening to their constituents.
Is part of the problem that a lot of the new a lot of the freshman Republicans that were voted in, and if some of the so-called blue dog Democrats were voted in this wave of the Tea Party, and they feel that they were sent there with a mandate,
right?
And they're not going to budge on that.
Well, I think
they have the wrong mandate.
well, and I think
have people changed their minds? Like, I know we gave you a mandate, but now
not a mandate to do that. They want the government to come together, just like in times past. Shared responsibility is the answer. We should all be Americans together, not such a division.
Well, I think a lot of it too is when you look at these polls, people want a deal just because they're tired of the infighting, and they want some certainty here. At the end of the day, people do not like being scared. They don't like uncertainty. They don't want to worry about, and of course, you know, the headlines every day, debt default, you know, the world's going to end. You know, that's not going to happen. Even if we get downgraded on our debt, even if we default on our payment temporarily, the world won't end. We will make good on our payments. We will eventually get a solution done. But the media has done a very poor job of presenting the information in a way that people understand. They just scared them half to death. And Geithner and President Obama himself have said these very same things. If we default, you know, we're not going to send you a Social Security payment. That isn't exactly the truth, but the point here is that most people want a deal, but they really don't even know what kind of deal they want. They just want a deal done.
All they know is that they want to feel secure in their own finances, their own future. So, John, let me present you with this. To give folks that are watching at home a takeaway, we just had a question from one of our employees here, you know, Carolyn, who came by and said, hey, what do I do with my son's college fund? You know, I've worked so hard for all these years to save it up. So what's your advice to people maybe while we're going through this rough ride? Where should you put your money so that you can sleep at night?
I don't know that you have to put your money anywhere different than it is right now. We're not even sure that this is going to be any different than Y2K from an implementation standpoint. Y2K was the biggest bust in history. They were telling us that planes were going to be falling out of the sky, that elevators were going to be stopping. I mean, we're going to have all these results of Y2K. Everybody got Y2K compliant, and absolutely nothing happened. I mean, it was...
There's a bigger concern here. And again, you know, people, and I agree with John, you know, the thing is that you shouldn't be focused so much on the debt ceiling issue. We need to be focusing on our economy. Economic growth is what's going to impact financial investments. We were at 1.9%, down from 5% just a year and a half ago. We're going to be 1.5% most likely on Friday when we report GDP. Economic growth is slowing. That is going to have a much bigger impact on the financial markets and your investment than this debt ceiling issue. So
are you advising people because of that slowing growth? Are you advising people to maybe move some of their retirement money out of the stock market?
Back in April, we recommended raising about 25% cash in portfolios, overweighting fixed income because that's a safer place to be, particularly in the summer. We have several things going on right now. Slower economic growth. The Federal Reserve is pulling out of financing the system through these quantitative easing and stimulus programs. And we're looking at all the manufacturing indexes from the Chicago Fed to the regional feds, all across the board showing contractionary levels. These are not good things for investments.
Okay. Barbara, let me ask you about employment, since that's your area of expertise. So a lot of people out there, there was a poll that came out recently that showed an all-time high, and not only people that are unemployed, but those that are employed are extremely nervous or unsatisfied with their job or about their job. So what's your advice for those folks? And I'm sure there may be many folks out there in that situation.
That's true. I see a lot of that. And what I've seen is a trend since the 1980s when we had the downsizing, and that might have been legitimate. But now corporations have found out that 5, 4, 3, 2 people can do the same work, and they're scratching and clawing to stay employed. But I think the answer is for each person to write their congressman and their senator and say, hey, do the job you were sent up there to do. And we need to cut out the loopholes so that the wealthy won't get these breaks. For example, hedge fund managers, and I'm not talking about John, I know that you and I talked about this on the break, but hedge fund managers pay less taxes than teachers and firefighters.
Because of some of the intricacies
of yes.
The interest carry causes that. But I mean, you know, that isn't a major problem, and that isn't a major expense. They need to close all the loopholes. Okay. But you know, I wanted to do the takeaway because I mean.
Okay, go ahead. Yeah, final words of advice for the folks.
Yeah, well, you know, if you can already see what's going on with as far as the bonds and as far as the stocks are concerned, nothing seems to be happening. Okay, the bonds haven't changed a bit, but you also can see what's happening to the dollar. The dollar's going down, and gold is going up.
Okay.
Okay, your major impacts right now seem to be gold and the dollar, gold going up, dollar going down. The bonds and the stocks don't really care, but we're not at the drop dead date.
Okay.
August 2nd is not the drop dead date. It's sometime forward of that.
Okay, Jose, so it looks like the takeaway is you to always consult your financial advisor, but we may want to head a little bit more toward a gold, a fixed income, bonds, or just plain cash to avoid some of the roller coaster that could happen on Wall Street.
Well, it is great advice that they're providing, and we're so very thankful that they've been able to stay with us throughout this hour.
Yes, sir.
Thanks a lot, Mike.
All right.
You know